I'm passionate about that. You know what? In our community, so I grew up in a time, and there's a lot of people probably that listen to your podcast that are a lot younger than me. I grew up in a time where my grandma had the life insurance man that came by and collected that check every week, every month, whatever the case may be.
Those guys are like dinosaurs
exactly.
now.
So I knew about life insurance from a young age. Now, in this day and age, of course, you have auto draft and all that kind of stuff, so you really don't see the life insurance man anymore. But I grew up in a time knowing about life insurance. So I've always known about life insurance. Nowadays, it's because you don't have that touch with it. It's kind of one of those things that's not talked about.
I say out of mind.
Well, and let's talk about it. Finances are not really talked about. You don't ask people about finances, right? That's taboo.
Hey, I seen that it said people would rather show you their message and the pictures in their phone before they
come on, but why? and the sad thing is, it's not even just a stranger. Some people don't talk about finances to their children. How they gonna learn?
Man, it's a tough question, especially in our community. Finances. I know someone who gets mad when I talk to them about, hey, you're getting up there in age. We need to talk about life insurance. And I was like, hey, can I put life insurance in you? And they'll be like, you'll probably die before I do. You're right. But it's like you would want to. They say, help me to help make sure you get buried. And it's like, I notice a lot of older people don't like to talk about it. And it's like, I'm gonna have to pay for it. You don't want to leave us with debt and trying to bury you. But that brings me to a better question.
Okay.
Cremated or burying people? Which one would you do?
I'm team cremation. So, and I'll tell you, and I'm going to go to something that you just said after I answer this question for you. I'm team cremation. And when I was talking to a family member about it, his question was, baby, which one's better for me? I said, well, let me ask you this. You have $10,000. Would you put it in the ground or would you rather your family spend it? And he was like, spend it. I said, he used a different word. He said, spend that shit, baby. I said, okay, and so would you rather spend that money or put it in the ground? He said, spend it. I said, well, get cremated. Listen, if y'all in Fort Worth, Dallas-Fort Worth area, it's a sign on in this funeral home in Fort Worth, and it's a cremation less than $1,000. So why would you spend $10,000 on a funeral? How many people still going to the gravesite? How many people are going out there and visiting their loved ones? And even if you are, I'm not knocking you, but we know that that's not them there. You know what I mean? Their presence is still here, but why are we putting that money in the ground when we can be investing that money into generational wealth for those that are still here and leaving a legacy? Come on. How many times do we go and take that insurance policy, whether it's only a $10,000 policy or more, and we put it in the ground and we spend our last, and then grandma's losing her house next month or next year, when we could have paid the taxes on grandma's house, kept that house in the family, and now we have a home that we can pass down from generation to generation. So now when the next generation comes, they always have a place to go. Or we can rent that out, and now there's always rental income coming into our family. Come on. So why are we not doing that? But what I wanted to go back to is a little thing that people don't know. Life insurance is it's not always for just when you die. Life insurance policies can help you when you're living. There's policies that help you if you get chronically ill, so you have a condition that won't go away. I recently lost a family member. He had a chronic illness, COPD. That's chronic. It's not going away. It's degenerative. If he had had this certain type of life insurance policy, he could have drew money off of his death benefit to help him live off of. In his last days, honestly, it could cover the cost of your rent, your mortgage, your utility bills, or just your daily living expenses. People don't know that. How many people know how much medicine costs? And when you're older and you're sick and you're not working, that can be a burden on you and your family. And some people go without paying for medicine because they can't afford it. But if you had got this life insurance policy and you can draw off of that death benefit, now while you're living, you can get the medical attention that you need. And guess what? The only thing that's going to happen is when you die, it reduces your death benefit. What that means is that you have a $500,000 policy. You draw off of it now. When you die, instead of paying out $500,000, it's going to pay out $450,000 or $400,000, whatever it is. That's what that means, but people don't know that. So again, when I say people think that it does not benefit them because they can't see it, touch it, feel it, it does. You can draw off of certain life insurance policies while you're living. If you have a critical illness or a terminal illness, you can draw off of that while you're living.
Okay, so next question. What's the difference between whole life insurance and term life? That's been the big debate.
Okay.
And who would fit which one?
So, I love this question because I get it a lot and people want to know which one's better for me, whole life or term life. So, the best way to explain it, whole life, you pay on that policy for your whole life. If you get it when you're 25, you're going to pay on that policy until you die or until you're 121 years old. Okay? Whole life is typically more expensive. It has a savings or an investment aspect to it, to where you build up what they call cash value. You can withdraw money from it. You can get loans off of it. And what that does is basically it becomes an investment tool for you, a way for you to build wealth. Okay? Now, term life is what we call pure life insurance. Think of it as like car insurance. Okay, you have it as long as you pay for it. So if you go and take out a 10-year term life insurance policy when you're 20, your life is covered from the time that you take that policy out for 10 years. At the end of that 10 years, your life is no longer covered. The money that you paid out into that policy went to cover your life for that time period. You don't get to draw any money off of it. There's no investment value, nothing. Okay? A lot of people are like, well, what's the point in that? Well, it's usually cheaper. More, I should say, I don't like to use the word cheaper. It's usually more affordable. Mm-hmm. Okay? It's usually for people who, if you're 20, you're typically not going to take out a 10-year policy because the chances of you dying between the ages of 20 and 30 are very slim. If you're 20, you may take out a 30-year policy. The chances of you dying between 20 and 50 is still very slim, but at least you have some form of coverage. Usually when you're 20, you don't have a lot of income coming in, so you can afford a $20 or $30 a month policy. Okay? But what you can do, instead of having a whole life policy and allowing them to invest your money for you, you pay, I'm just going to say $25 a month for this term policy, and you invest your own money into an investment fund, right? Maybe a mutual fund. At the end of that 30-year policy, do you still need life insurance? No. Because if you've invested into the stock market for 30 years... I
mean, you should, dividends alone you should be, and if you reinvest your capital gains...
Come on, compound interest.
I mean, that's the greatest thing in the universe.
Come on.
It's the greatest thing in the universe.
With me, I'm a big fan of term life. What people don't know about whole life policies is that when you buy a whole life policy, your insurance company is buying term life policies in your whole life, okay? So I know it gets confusing. They're telling you, okay, you have a whole life policy, this is what you're paying. In that whole life policy, they are buying term life policies with your money. Mm-hmm. And they're investing the difference. They will pay you a certain interest rate for your savings account, okay? Mm-hmm. They earn interest on the other amount.
Basically what the banks do. You put your money in there, they take it and give it to someone who takes a loan out, like a construction loan. Then they turn around, they make the money back when the construction pays them back, and your money's just in your account when you go to draw it away.
And who you think making the most interest?
Oh, the bank.
Okay. So why not do it yourself?
So I got a question. So if it's up after 10 years, is it you get your money back, or it's just going to sit there until you die? What? So, because am I predicting when I'm going to die, basically?
You're not predicting when you're going to die. You're saying, cover me for this time period. So just like when you get car insurance, if you go get insurance on your car and you keep this car for 10 years and you never get into a car accident, do you get your money back for the time you paid car insurance?
So that's what term life is?
It's essentially the same thing. It's you have it for that term, just for that period of time. So for instance, I have a term policy on my life. I have a 30-year term policy. I'm 36. So when I turn 66, if I live to see 66 and I do not die, that term will end. My life was covered for 30 years. Okay?
We don't get nothing out of it?
You get nothing out of it. However, for $250,000, I only paid like $60 for it, right? For a whole life policy, I would pay over $200. What I can do is invest $140 myself into a mutual fund for 30 years. Okay? At the end of 30 years, do I need life insurance?
Hell no.
So why do I care if I have term my whole life?
So you're just like, hey, in 60 years, I'm gonna look out. Well,
in 30 years,
I'm gonna look out for myself and pay this $20. And the money I was gonna pay on whole life insurance, I put it into the stock market, then these CD, what is it?
Mutual funds, whatever.
Oh, okay. So that's just, looking out in case something, you walk outside and get hit by a car.
Exactly.
Okay.
I'm covered in case.
Okay, that makes sense.
I'm covered in case something happens over the next 30 years.
Oh.
How many people in their 90s are still working and can afford to pay $150, $200, $300 in whole life policies?
So security is going down, so hell no.
So what do you think is going to happen to their whole life policy? It's going to lapse.
So what's better for them if they're will insurance insure people who are older? Like, how does that work for older people like 60, kind of sick? Like, someone got their mama, daddy taking care of him, he's staying with you and your husband, and you want to get them insured because, you got to pay some of them bills when they die, or, you kind of want to invest in your grandkids or something like that.
Right.
How would you get them to say, let's hypothetically, they got diabetes and high blood pressure and all that good stuff. How do you construct an insurance policy or finding them an insurance policy for them?
Yeah, so it's never too late. I'll say that. Unless you one foot in the grave, okay? Let me correct myself, it's almost never too late, okay?
Yeah.
So there are policies out there that will cover people who are ill, who are older. There are guaranteed life insurance, guaranteed issue policies that will cover them. They usually are more expensive and less face value, meaning that they can probably only get covered for between $10,000 and $25,000. So it is still some money, but it's not going to be your $50,000, $100,000 plus $1,000 that you can get covered for when you're younger and healthy.
Okay, so let's say, Mama, you're gonna get $10,000 to $15,000.
Right.
We're gonna get you cremated.
There you go. And what's wrong with that, though?
I mean, it's nothing really wrong with it because it's like I can't do nothing with your bones in the ground anyway.
Exactly. So let's say that. So take that scenario, Mama. I'm getting you covered. Even if you have to use that insurance policy to get her cremated, you can still change the trajectory of your family by maybe starting a business, by even investing into the market and changing your family's financial outlook with that insurance policy. That's what insurance can do for families. It doesn't necessarily have to just go for the burial. There's so many options out there for final resting places that we don't always just have to go with tradition. I really encourage people to look and see what options are and really check your own beliefs and values to see, am I doing this just out of tradition or is this really what I believe in? You know what I mean?
Say, do I really need a hearse with a fancy gold-plated casket with 6 people? Then now I got to get them fitted for tuxedos and we going broke. Or little John, we got to go start a GoFundMe.
Ooh.
Like, I mean, like, that's why I be wondering. That'd be what I wonder. Like, let's say little John got shot. Or Tarika got, or I'm not trying to say no ghetto names, don't get me wrong. But, Sarah gets killed or something, Sarah's son dies. She dies of COVID-19.
Right.
And we go start a GoFundMe. And we just say hypothetically she's a single mother with 2 kids. The world gonna feel sorry for her. She raised over $15,000. Why do we need to spend so much money on a casket? If she didn't have the money to have her funeral, most likely her kids are gonna be left with nothing. And they're not really giving out Social Security to kids like that because now they go off a point system.
Come on.
And now that we're going through pandemic, I'm assuming that point system has went up. Like I had to check mine when I started doing my entrepreneur thing. And my thing, like I barely hit the mark of the point system.
Yeah.
But my kids still won't get that much if I would die.